get more across these 3 minutes then, the markets in 3 minutes, Mark, and you reflect on your note this morning on some softness coming through for the US consumer, at least on some data points.
Yeah, look, we're clearly getting a slowdown. Is it the hard landing that I've been saying all year would probably come around December time? I don't know. I'm still in that camp. As you know, I've been a little bit nervous in the last couple of weeks, but I am still in that camp that I think the recession starts in December. It might end up being January. And the point is, while the readings at the moment tally very much a soft landing, I understand that. Remember that the path to a hard landing world passes through those beautiful meadows of soft landing, and therefore it's always going to look like a soft landing until it gets really bad. It's whether the deterioration stops here, and I see no reason for that to be the case. The consumer is finally being squeezed. Every metric points to that. There's no doubt about that. Will they continue to be squeezed? I think absolutely so, because the whole point is policy acts with a lag, and we know that. It's long and variable lags, and it's continuing to hit different sectors. So I think the economy is going off a cliff. I am still nervously, but still holding to the recession will start in December. And the worst case scenario that I outlined in the summer is coming through, that the idea that the Fed would probably have to be hawkish in December because they wouldn't yet know the recession is coming. Remember, we never know the recession is coming in real time. It's only when the data comes through later that we then confirm it's happening. And I'm really, really worried that the Fed will be slightly hawkish next week, at least implicitly through upgraded forecasts, even as the economy is going off a cliff.
OK, potentially a slightly hawkish commentary, at least line coming through from the Fed as you paint this landscape for us of these green meadows before hitting a pretty dangerous cliff when it comes to the US economy. Your favourite economist, of course, Anna Wong, over at Bloomberg Economics, now forecasting cuts starting, Mark, in March with up to 125 basis points of cuts by the end of 2024. Your take on that view?
You're right. She is my favourite US economist. Look, I think this makes sense. I mean, the only thing I'll say is that I do believe the Fed that they don't want to cut until they're absolutely forced to. So it becomes a call on when you think we know that we're in a really bad situation. Will we know by March? That's really, really completely possible and viable in my scenario. I just can't have much certainty. What I do think will happen is that at some point next year, we will get quite aggressive cuts. So my scenario is that the economy will go into recession, probably starting this month, might end up being next month. We won't know this till February or March. And sometime, the late first quarter, maybe second quarter, we realise that this is actually really bad. Now, whether that comes through the number of defaults, the unemployment rate shooting up, or just generally the growth figures going really, really bad, then the Fed belatedly reacts quite aggressively. And I do think the idea of 125 basis points of cuts next year is possible. It's just that we won't really know that until we're quite far into the recession and into the slowdown. The Fed wants to maintain higher for longer for as long as they can.